Hello everyone and welcome to my weekly update with me, Richard Perry, market analyst at Hantec Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now moving into this week, we've got a lot of factors that are still impacting on these markets. We've got that assessment from Donald Trump that a deal is potentially close between the US and China, or an agreement is close over trade. Now that has an impact possibly on a longer lasting factor on the markets. Now also, we need to look at the fact that non-farm payrolls again suggests that there's no reason for the Fed to take its foot off the gas on its monetary tightening, and that is still something that could potentially drive a stronger dollar. The trade aspect could potentially drive a weaker dollar. And also this week we've got the US midterm elections. Now these are key. These is the first time in 2 years we've seen the US go to the polls, and effectively it is an opinion poll on Donald Trump, and it'll be very interesting to see how America votes in this election, and it could have far-reaching consequences in terms of the control of the Congress. The two houses could potentially both change hands, and that would be have an impact on the second half of Donald Trump's presidency and or at least the first term of his presidency anyway. So yeah, we've got that this week, and also the Federal Reserve monetary policy meeting. But where are we looking at on how the forex markets are moving? Well, we've seen euro dollar, which has come under pressure recently, back down to 113 figure. It then bounced, but that bounce seems to have fallen over. There seems to be a pivot around 114.30 to 114.50 that the markets I think will be looking out for, and it's interesting that Eurodollar is back under that this week as we approach these midterm elections. Now, as I said earlier, you can see in the graphic here, you've got only a handful well, I say a third of the seats in the Senate that are up for grabs. So it doesn't really look likely as though that the Democrats are going to be able to grasp control of the Senate, but they're more likely to be able to get control of the House of Representatives. But again, what sort of impact will that have? I think that would, if that were to be the case, it would drive dollar volatility initially, but I think ultimately it wouldn't be a game changer if the Democrats couldn't win the Senate. So I think that is what we're looking out for this week, just volatility really. But then unless both houses change hands, I don't really see it going to be a game changer. So how is cable going to be looking? I think again volatile. I think we've got Brexit negotiations continue to drive the opinion on how sterling will be performing in the near term, and I think there has been mood music towards a potential deal which has helped to support sterling. Sterling's sharp rally last week, continues into this week, but again the news flow is a big driver on sterling, so depending on how that turns out. Now in terms of your dollar yen, you need to be looking at the yield differentials. They are still very much dollar positive. I think if this China trade dispute can be diffused somewhat, I think that sort of clears the decks for dollar yen to move higher again. So on equity markets, we've got again risk sentiment is a key factor here. We've seen equity markets throughout the summer under pressure from the trade dispute. October was a terrible month. We've seen a rally early on in November, but that rally is now being a little bit questioned by these midterms that are coming up. And again, if the Democrats gain control maybe of the Senate, of the House of Representatives, that could produce a bit of volatility. I don't think it's going to change the game though. It would only really have a lasting impact, I think, if they gain control of both houses, and I think that is basically what the markets would be most negative about in that scenario. In terms of Wall Street, we've seen Wall Street under pressure, bouncing a little bit, but again, can that bounce continue? Wall Street needs, or the S&P 500 needs to hold on to support around 2,790. I think that is a key level that markets will be looking out for there. In terms of the Dow and the S&P, again, as I said, the Dow is in a similar sort of situation to the S&P 500. It needs to hold on to the near-term support. So it comes in sort of around 2,500 to 2,500. sorry, 25,000 to 25,100 is the level that you need to see holding on the downside there. Into Europe, the DAX is equivalent support level on the DAX is 11,004 to 11,005, and on FTSE 100 is 7,000. Sort of 7,000 area really needs to hold there on FTSE 100, but there's a higher support at 7,085 to 7,115. Now on commodities, the gold price has been again sort of moving around with the dollar. The dollar had a bit of a corrective phase, and that allowed the gold price to rally a bit. And gold has sort of maintained and held on to those rebound gains to an extent, although there's been a little bit of impetus that's been lost in the last week or so as the market's gone sideways. Interestingly, around the long-term pivot at 1236 again, failure to break out above that just sort of keeps the cap on the gains and makes potential for a bit of near-term ranging, I think, on that. For the oil price, we've got the move towards US sanctions on Iran. Now this is important because it potentially takes supply out of the market, but Saudi Arabia are picking up that supply, but the question is how quickly can they do it. And also we've seen news that the US sanctions are going to also have some waivers, some near-term waivers that makes some of the onerous sanctions a little bit less negative for the market. So I think that is an interesting factor. I mean, we have seen oil falling for the last sort of 2 or 3 weeks quite sharply actually, and I think that if it having WTI having broken down below key support, that is it was a key breakdown to 63.60. But will it continue to sort of track lower? If the market now knows about the sanctions and prices all of that in, then we might start to see a bit of support coming in once more for oil. But with that in mind, we're looking out for, throughout this week, services PMIs on Monday, certainly for the US ISM data. We're looking out for the central bank meetings. Actually, we've got the RBNZ, we've got the RBA, and also the FOMC, none of which are expected to do anything, so they're not the main focus this week. The midterms on Tuesday are the main focus though, and how the markets sort of react to that on Wednesday. So with that in mind, I wish you good luck in your trading, and I'll speak to you next time. Thank you.